What's up, y'all? Ooh, my voice did something weird. That was kind of cool. Got real low. Anyway, I got a new microphone. We'll see how it goes. You tell me. Put it in the comments. How am I sounding? Bobby always gives me hell because he said my audio sucks. So I'm trying a new microphone tonight. Let me see if we're live. There we are, and I got the volume up on my phone. Holy smokes. All right. That's enough screwing around. What's up, everybody? It's Wednesday night. It's time for Bookkeeping Beer and BS. I'm going to do something tonight that I've never done on a live show before. But first, and I'll set the stage as to why I'm going to do that. But first, make sure, since it's still just like February 10th, we got a lot of year left. If you feel like you're watching this and you're trying to figure out what you should be doing for this year and what your game plan is for this year, make sure you go out and get the target budget spreadsheet that I made for all the service industries. Not all of them, like 10 of them or something. There's a ton of target budget spreadsheets out on our website, Your Blue Skies, that's SKIES.com. yourblueskies.com. It'll be really obvious where the target budget spreadsheets are, but it is literally a budget that is pre-made by line item, how much you should spend on each thing as a percent of your revenue. I mean, it's got tons of functionality, like totally customize it. But if you just want to like put in your sales target by month, it'll spit out a budget for you by line item, ready to go. And what's super badass about it is it ties back to what I'm going to talk about tonight. So originally, I had my man Bennett Grove scheduled to be a guest on the show. He runs $1 million plus. I got to share this thing. Hold on. Hold the phone. I'm just by myself tonight. I don't have a co-host. I don't have a guest. So if you're watching this, share it to like some cool groups that you're a part of, preferably home service industry groups, because that's primarily who I'm talking to. I'm going to share this on my feed because I get a lot of people watching. My grandma's probably going to jump in and do some watching. But since I'm going to be talking and I don't have like a guest to do some talking while I do some sharing, I'm going to count on you guys to do the sharing for me. So if you think this stuff is valuable, put it into some groups that you're in and get more people into the live. It functions better with more viewers in that we get some good questions that you probably have and maybe you're not asking or haven't thought of. So do some sharing for me. Give it a like, give it a follow, a subscribe. I'm also gonna download this when it's done and then put it out on YouTube. So if you're watching it on YouTube instead of Facebook, that's what's going on. But go check out my Bookkeeping Beer and BS YouTube channel as well and subscribe to that because I need more subscribers out there. I'm still clinging to Facebook. So anyway, Bennett Grove was supposed to be on tonight. What's up, Pat Clark? So Bennett Grove was supposed to be on, and he's got $1 million plus junk removal business, and he started it while he was a firefighter. And just recently, he retired as a firefighter to work full time on that business. But he had it doing over $1 million while he was still a firefighter full time. So we were going to talk about how to do that side hustle thing and grow it as a lifestyle business that really can support you and your family, while you're doing something else. And there's a ton of us in the home service industry that get started that way. Some, dive in and do the home service thing full time. Some keep doing it as a part-time thing and are able to grow massive businesses doing it. So wanted to learn from Bennett how to do that. He had something come up in his business that he had to prioritize tonight. So he's not going to jump on, but we're definitely going to reschedule and have that conversation with him. In a way, though, I'm not like things happen for a reason, fate, blah, blah, blah. Like, things happen because you make them happen, right? We're small business owners. We know that. Nothing happens if we're not making it happen. But there is something that I want to make happen tonight since we're going to have to reschedule with Bennett. And that is there was quite a few chatters on our Bookkeeping Beer and BS page this week about, hey, how do I set up QuickBooks? Or how do I get some basic accounting knowledge? And like I said, I've never done a how to set up your QuickBooks the right way on this live show. I have like a training course and you can go buy it, but I'm about to give it to you for free. So don't go buy it. Just listen to me now. First, I'm having Bookkeeping Beer and BS, but I got a little tickle in my throat tonight. And I feel like whiskey kills a little cold, better than a beer does. So whiskey and ginger ale it is. All right. So what I'm going to do is like start a fresh QuickBooks account live from the ground up. And I'm going to load up our chart of accounts and I'm going to talk through it and how I clean stuff up and how I merge it and things to be thinking about and what you should be looking for within your QuickBooks. And this is going to be QuickBooks. That's all we work in at Blue Skies. And we have over 100 bookkeeping clients that we do bookkeeping for: pressure washing, home cleaning, lawn care, landscaping, junk removal, pest control, carpet cleaning, you name it, like all the home service industries we're helping out. Two things though. First is, don't go buy QuickBooks online because people like me get it for half off. And I'm a cool guy, at least I try to be. So if you're going to go get QuickBooks, you're going to go pay like $40 a month for online essentials. Yeah, like you'll get like a little interim deal for 6 months, half price or whatever. But eventually your retail price for QuickBooks Online Essentials, which is what you want if you're scaling a business, is going to be $40 a month. I always get it for 20. If you're my bookkeeping client, I just give it to you for 20. I buy it, I pay for it, and then I pass along to you. So you save $20 a month. If you're not my bookkeeping client and you want to try tackling it on your own, I'll still split the savings with you. So I'll buy it, I'll pass it to you at 30 rather than you paying 40, and you have that for as long as you want it. So don't go get QuickBooks. Use me to save money. Use me, damn it. So anyway, that's the first thing. The second thing is, if you're running a home service business, just like the reason why your clients hire you to pressure wash for them or clean their home or do the thing is because they're not the experts at it. They don't have the time to do it, and they value your expertise more than them grinding it out and figuring it out and so forth. And I'm preaching to the choir here, but you generally shouldn't do your own bookkeeping, because you're probably not going to like it. There's not a lot of people that run home service businesses that are like, yep, I'm here because I like accounting. That's probably not why you're running a home service business. So don't do it if you don't like it. You probably don't have an accounting education. And some of the things that you do in bookkeeping seems pretty damn easy. Some of them requires you to have a degree in accounting to know how to do it. And if you don't do it right, you create tax issues and legal issues and who knows what else. So save yourself from that headache and just don't try to be an accountant if you're not one. And I'd say, just like you wouldn't represent yourself in court, you get a lawyer to do that because they know the law and they know what to say and what not to say. You shouldn't try to be your own bookkeeper because you can't represent yourself right in your QuickBooks if you don't know actually how to do accounting. There's things you need to know about where stuff needs to go, how to split stuff up. Is it P&L, is it balance sheet, that sort of thing. So I'm going to teach you all this stuff about how to set it up and where stuff goes, with the caveat of just hire me to do it for you because you're not going to like this stuff anyway. But stay tuned because it does pay to know where stuff is going, why it's going there, how to measure it, how to read it, right? As a business owner, you don't need to do your accounting. You should be paying somebody to do that, but you sure as hell better know how to read it because that's your report card and you need to know how you're doing. So that's my spiel. Hire me to do your books. We'll get it right for you. And I'm going to show you how we get it right for you. So I'm going to do a little screen share here. Let me see. I got questions. Let me, I'm going to scroll through real quick. Pat Clark in the house. Mario, what's up? Frank is in the house. Dominique Demond Williams is in the house. Tom Abrahamson, what's up, man? That's good to see Tom. I was thinking about Tom. He's a mentor of mine from my corporate days. And I got to go, usually like this time of year, we'd go to Top Golf, and he's much better at golf than me. He lets me win every once in a while, but I gotta hang out with Tom again. Ben Smith in the house. Look, I'm gonna hit a couple questions here before I start doing diving into QuickBooks setup stuff. So Ben says, tell me about the difference between the P&L and my balance sheet. And knowing Ben, that wasn't a typo. He meant balance sheet. Or he probably just types shit so much that maybe it just auto-corrected that. Why do trucks that I buy for cash not go on the P&L? Why is my income as an owner on the balance sheet? Should it show on the P&L if I'm still working in my company? So here's the difference, Ben. And this is a good question because this will go into how we set things up. Your P&L statement is a measure of your performance over a period of time. So it's how much income did you bring in over a period of time? How many expenses went out the door over a period of time? Your balance sheet is a statement of net worth. At any point in time, not over a period of time, but just at like right now, or maybe right now, or maybe back then, but not over a period of time, just at a certain point in time, what was your net worth? And that is your assets, what you own, and your liabilities, what you owe, and then your equity, basically whatever's left over. Like how much more you own than what you owe is your equity. That's your net worth, right? And so you could do that on a personal level, right? What's in your bank accounts? What's in your retirement accounts? How much is your house worth? How much are your vehicles worth? Minus what kind of debts do you have against them? That's your net worth. That same principle applies to our business. That's our balance sheet. The reason why equipment and vehicles and stuff like that goes on your balance sheet is because it's an asset. It's something that you own, and the useful life of it is going to be spread out over multiple years. So if it goes on the P&L, it's because in general, its useful life is less than a year. If it goes on the balance sheet, in general, it's because the life of it is longer than a year. And so what ends up happening is, for tax reasons, they'll depreciate it over time. So if you buy a $50,000 asset, the government has different like depreciation schedules, but just for sake of ease, that $50,000 asset is going to get expensed $10,000 in year one, $10,000 in year two, and so on and so forth. And that depreciation expense, that's going to go on your P&L. But it's a way for the government to like limit how much you can deduct that vehicle for tax purposes, and they try to spread it out through the useful life instead of just giving it all to you in year one of when you buy that asset. So that's why equipment and stuff like that, generally stuff that's over $2,500 for a small business, gets capitalized on the balance sheet, is so that you can spread out the useful life. But as that useful life gets used up, it gets depreciated, and then it's an expense. Like each year you'll have a depreciation expense. It might not show in your QuickBooks, but it sure as hell will be on your taxes, and your CPA will take care of that. The reason why your pay goes out of your balance sheet is because when you distribute money, when you take money out of the company, you're doing it as an owner, not as an employee. Now, you should be taking a wage, and that wage should be coming out of your P&L for like, and I know in your case, you're an SCorp, and I think, that's something to run by your CPA, is you should be taking a paycheck. You shouldn't fully compensate yourself with a paycheck. You should also take distributions as an owner. But I always try to think of it as like you're wearing two hats. There's the CEO, Ben, and there's the owner, Ben. The CEO, Ben, has a job and gets paid for it. The owner, Ben, put up his capital to start a company. And just like if you invested in the stock market, you want to get a return on that money. And when you distribute, it's like getting a dividend in the stock market. That's what a distribution is. You just happen to be the owner and the CEO at the same time. So you should really get paid two different ways. One is you should get a salary or some sort of paycheck. The other is you should take distributions when the company doesn't have any other good use of funds to put to work to grow the company. Then pay some dividends, aka distributions. Let's see. Mike has said $25 a month for QuickBooks Mobile. That's not bad. Justin Willard, I look forward to chatting with you. We'll get you squared away. What's up, Courtney and Jake? Probably Jake, but maybe Courtney. How much to set mine up correctly? So when we do a setup, we charge $350 to like get all the QuickBooks stuff right. Jim Prom, catching the replay. What's up, Jim? Jim's another Minnesota guy with me. Let's see. Questions. What's the average monthly cost for bookkeeping services for an owner operator sized company? $150 a month is what we start at. And that's probably where you'd be at owner operator wise. Ben Smith likes my owner CEO breakdown. Oh yeah. You could even, Ben, you could maybe even like bring different shirts to work just to, F with your employees, be like, oh, sorry, I'm owner Ben right now. And then, when they let their guard down, then you come in hollering at them as CEO Ben. All right. So I'm going to do a QuickBooks setup. Let me make sure I got my out of breath from that. I worked out today too. I shouldn't be this out of breath. Yeah. That was probably a really loud expression of quench in that microphone there. Here we go. And actually, I got to look at my Facebook Messenger here. Oh, Micah asked me another question. I want to stick it to the man and become incorporated ASAP for maximum write-offs. Made 53K last year. You think I should go SCorp next year? Yeah. By make, I want to make sure you're not talking about revenue and that you're talking about income. You pay taxes on income, right? And if your business income, like the net income of the business, is over 20 to 25,000, then you should be an SCorp. I'm actually going to be in Myrtle Beach tomorrow, speaking on that, and I have like my 4 tips: maximize profits in 2021. Tip number 1 is become an SCorp. So yeah, probably be an SCorp. I gotta pull up a Facebook Messenger email for Josh Stoll, because Josh was the one that had asked the question in the first place. Josh, I apologize. I don't know the name of your business. So I'm going to do a screen share here. And I'm going to call him Josh Stoll's Pressure Washing. It's a badass pressure washing company right there. At least I'll know which account is his. And I got Josh's email. No, did Josh send me his email? He did. Hold the phone. I am going to be looking at my other monitor momentarily. Oh, I do have his business name. Just kidding. It's Lancaster Power Wash. I do, maybe this is just me, but our clients are all people and not businesses, even though we all run businesses. So whenever like we're doing bookkeeping for people, I always put their name in because that's like our client, like, yeah, we work for the business, but our client is Josh. So don't email Josh, but this is truly going to be his QuickBooks account that I'm going to set up right now. So here's the deal. Like I said, we get a deal on this. QuickBooks Essentials, usually $40, and this is the one that you want, and we get it for 20. So boom. And then one thing that I always preach, I tell all of our clients, this is like, anybody that tells you that they own your QuickBooks account, like if you have an accountant and you're like, hey, I want to take my business elsewhere, and they're like, sorry, you can't have it, make sure that you are the master admin on that account. They can be the master admin on your account, and then you will never be able to get that information from them. So I always tell all of our clients, you can fire us whenever you want, because I'm going to make sure that you're the master admin. So like I could click this button and I could be the master admin, but no, Josh can fire us if we suck. So we're not going to suck. We're freaking awesome. All right. Here we go. Let's do this for Josh. I don't know if Josh is even watching. I think he said he could maybe watch, but Josh, I'm setting up your QuickBooks for you. Here we go. Man, I'm just like super quenchable. Is that a word? Quenchable? You know what I mean. Here we go. Ba-bow, ba-bow. All right. Now I just had to look at my phone, make sure I got that all going. So like if you get to this screen, doesn't really matter. Pressure washing, and that's not a real thing. So you say, find one, blah, blah, blah. If you have QuickBooks Desktop, okay. I'm looking at my phone and it's lagging by like 20 seconds as to things that I've already done. And I was like, oh crap. But I think it's just lagging that far. So if you're on this screen, just like make up an industry, it doesn't matter. You could be whatever you want. Doesn't really matter. And then if you're using QuickBooks Desktop, you could do this and follow the process. It's pretty easy to bring QuickBooks Desktop into QuickBooks Online. Don't click any of this stuff. Totally unnecessary. As I'm talking through this, let me make one thing really clear. I'm setting this up for a cash-based business. By that, I don't mean we're wheeling and dealing, slinging Hamiltons. I mean, we are cash accounting. We are not accrual basis accounting. If you're under 5 million in revenue, you should be cash basis accounting, which means, sorry, my camera's like a little crooked and I'm just can't handle that type of thing. So if you're under 5 million in revenue, you should be cash basis accounting, which means you record revenue when the money gets deposited in your bank account, not when you send an invoice to a client, and you record an expense when the money leaves your bank account or you swipe your credit card, not when you have an obligation like paying your cable bill. Like it's just a bill. It doesn't count as an expense for you until you actually pay it. Once you're over 5 million, you're on what's called accrual basis accounting, which is you got to record sales by when you invoice them, not by when you receive them. You got to record expenses by when you get the bill, not by when you pay it. So now you got to like keep track of all kinds of different stuff. And the reason they do that is like accrual basis accounting is a ton of work to keep track of all that stuff. Cash basis, pretty easy. It's just when things are coming and going from the bank account. And that's why if you're under 5 million, they're kind of like, yeah, don't bother with accrual basis accounting because it's a lot of work and you're a small business. Don't worry about it. So when I'm doing this, I'm doing it as a cash basis business. That's pretty much all of us. So really, like, doesn't matter. Sole proprietor, that's fine. We provide services. All right, so we're in here. It's a fresh setup. No, I'm not going to take a tour. What we need to do when we first start is set up our chart of accounts. So you're going to go in here and there's going to be like nothing in here. There's a handful of accounts. Now I want to make one thing clear because there's like standard accounts in QuickBooks that you just can't get rid of. You can't get rid of uncategorized asset. You can't get rid of undeposited funds. You can't get rid of uncategorized expense. Like it's just ingrained in QuickBooks. And if I try to inactivate it, it's going to say, you can't delete this because it's part of the online banking feature. Do not ever put anything in uncategorized assets, undeposited funds, or uncategorized expenses. There's no such thing. It's not a real thing. If it's an asset, it damn well better have a category. If it's an expense, it damn well better have a category. And undeposited funds would be if you're doing accrual basis accounting, that's QuickBooks' way of saying, all right, you got the money from the client, but it's not in the bank account yet. It means it's that money's in limbo. You shouldn't have any accounts receivable in your QuickBooks. Do not bring your invoices in here. Like pet peeve of mine as a cash accountant person, do not sync this with your CRM. Every CRM, whatever it is, House Call Pro, Jobber, Markate, Service Autopilot, you name it. Every CRM is going to be like, oh, we have a great two-way sync with QuickBooks. None of them are like, hey, you're probably a cash accounting business, so you don't need to have your invoices in QuickBooks. And we already have an AR system with all your invoices here, so don't do the same work twice. I've never seen a CRM say that, but I'm going to tell you that right now. Do not load your invoices in sync with your CRM. Once you're a $5 million company, knock yourself out because then you're going to need that in your accounting system. Until then, when you deposit money, that's when it's sales. Don't need the invoices in here. You don't need to manage two things or the same thing in two different places. It's just a waste of time for you. So I'm going to start a couple of accounts in here. One is you probably got a checking account. So I just went to new. I'm going to add a checking account, riveting stuff here. And I'd say like add, whatever the last four numbers of the account are. And if it's Chase, say like Chase checking, some way that when you're looking at the banking feed, which I'll get to, you can identify this is that account, and name them appropriately. So I'm going to create one just for fun. Same thing if you've got like credit cards. And here's a pro tip. When you've got credit cards, you're going to create a credit card account, obviously. Their credit card detail type, nailed it. Usually the detail type doesn't matter for shit. It's just really a wasted field, but it's mandatory. If you have Chase or Bank of America, those get kind of tricky to be able to reconcile. So here's my pro tip. You're going to have like a Chase Master account. I'm going to call it Chase Master CC account. And Josh, if you don't have any of these, that's fine. We'll erase them. But just for the show. And now, so like I'm not going to connect any credit cards to that account, but all the actual credit cards that I have are going to be sub-accounted to it. Chase, Dan's card, 57, blah, blah, blah. And that's going to go up into the Chase Master account. So I hit a sub-account and I'm going to put it to Chase Master credit card. And bam. And then I would do another one. And let's say we got Josh's card. I don't know why Josh gave me a credit card. What a weirdo. Can't believe he gave me one. And his is that number. And the sub account it under the master account. Boom. So now you can see we have Chase Master credit card, and then we have the two credit cards underneath it, and we'll link those specific credit cards to those spots. But for Chase and Bank of America and stuff like that, when you pay the bill, you like pay it at the master level, but each credit card needs to be linked individually. You can't like link the master account for whatever reason, which is really stupid. I hate that they do that. So you have to add each credit card individually as a sub account of a fake, like there's no credit card here. This is basically just your statement, like your parent account, if you will. So anyway, enough of that. Now, when I load up a chart of accounts, I have it pre-built. So I don't want any of this shit that's in here. Pardon my French. No, don't pardon my French. That's just how I talk. I don't want any of the shit that's in here. I'm going to load in my own stuff. So I'm basically going to deactivate all kinds of stuff in here. Like I said, I can't deactivate the uncategorized expense. That's got to stay. But I'm going to go in and inactivate whatever I don't want in here, which is pretty much everything that's already in here. And I'm not going to do that all right now because I'm going to show you how to do this. And if you're a do-it-yourselfer and you're like, Dan, I know you said I shouldn't do this myself, but I'm gonna, and like, I'm saying this kind of jokingly because this is totally the type of person that I am. Like, you can tell me what I should or shouldn't do, and then I'm gonna do the opposite of what you told me just to verify that what you said was true. So if you're like me, you're gonna go get your own QuickBooks, even though I told you not to. You're gonna go download this chart of accounts that I'm gonna tell you about, and I'll get it out on my website. You can go get it for free. It only took me 10 years to build it. You can have it for free. I got to get it out there. But you can go do that and do all this work. And then you're going to do it for like a month and then you're going to fall behind and you'll be like, shit. Hey, Dan, can you do my books for me? And I'll be like, no, I'm going to charge you extra because you just made more work for me. But do it anyway because you just like trust but verify, you know. So what we're going to do is we're going to import this chart of accounts. And again, you can go get this off of our website, yourblueskies.com. Let me go to my bookkeeping stuff, and I got my Blue Skies standard CoA template. I'm going to drop it in. And because I'm a nice guy, I have this thing built out so it like sub accounts your entire P&L for you. This won't have your balance sheet accounts, right? Like I don't know the names of your assets and your vehicles and what loans you have and not, but I know all the P&L accounts that you need, all the things that are going to hit your profit and loss. Oh, my wife just said I'm smart. Hi, Marty. She's funny. She got her funniness from me, probably. All right. So you can see all of a sudden now I got cost of labor in there with a bunch of sub accounts. I got other cost of goods sold in there with some sub accounts. I got supplies and materials. I'm going to go through the logic of these sub accounts, why they're broken down the way that they're broken down, what it means, what we're measuring, and why we're measuring it. I'm going to nerd out on one other QuickBooks thing here quick, which is when you have accounts, like you saw me deactivating stuff, but you don't want to, or I guess they call it what, inactivating? Yeah, make inactive. So you don't want to inactivate it if there's data in it. So if you've been using QuickBooks and you're like, oh, I'm totally going to go get Dan's chart of accounts, load it into my QuickBooks, and then I'm going to use this chart of accounts. Well, like, guess what? You're going to load mine in and there's going to be nothing in there. All of your data is going to be in all your old accounts. And if you just inactivate them, that data, it doesn't like go away, but it doesn't go into the new chart of accounts. And you might have a repairs and maintenance account, and I just loaded in a repairs and maintenance account under variable overhead costs. And now you could sub account yours, but now you're going to have two of them. So the way to do it here, rent and lease, we got that account. That account is also in my structure that I just loaded in. So I'm going to edit it. Now, like I said, detail type doesn't matter, but if you're going to try to do this, you have to select the same detail type as the account that you want to like combine it with. So rather than inactivate these accounts, if there's information in them from me having been using QuickBooks for a while, I don't want to inactivate them. I want to merge them with the new account that I just brought in. So if you download my chart of accounts, pretty much everything besides cost of goods sold and advertising, those are the only ones where I really like have breakouts of detail types. Everything else is just other business expense, just a business expense. So rent and lease, I'm going to say that goes in the fixed expense bucket. Oh, crap. It doesn't know that I loaded it in yet. So I got to do a quick refresh and a sip. All right, now it'll let me do it. QuickBooks. All right, so rent and lease, I'm gonna edit this. And like I said, this is already in my chart of accounts, but it's already in the QuickBooks. Like, here's probably some accounts you want. That's what the person at QuickBooks said when they put those like half-ass accounts in there. It's probably you want. So rent and lease is a fixed cost, and I'm gonna go over what that means and why we break those out. You can see rent and lease is down here. Now to merge them, you have to like, this has to be the exact same. And the capitalizations don't need to be the same, but like the spaces, the apostrophes, the letters all need to be the same. In this case, rent and lease, and I need to sub account it the same. So if it was like a sub account of insurance, I'd have to click insurance so that, you know, I'm merging health insurance with health insurance. In this case, rent and lease is a sub account of fixed overhead. So I need to sub account it to fixed overhead. And when I say, yeah, it's going to say, hey, you changed the detail type. And I'm like, yeah, no. And as they say, hey, there's already one with this name. Would you like to merge the two? And I'm going to say, hell yeah. And then it's like, wait, are you still sure you like the detail type? And you're like, yeah, I already told you that. So now that rent and lease category, wherever it was in here, it was somewhere in here. It's somewhere right in this area, is now combined with rent and lease here. There, it was in this bucket. It was by repairs and maintenance. So we'll do another one just for fun, because this one I actually have to change the name on. So again, like repairs and maintenance, yeah, there's a detail type for it. I just find that to be super useless if you have a good organized P&L. Repairs and maintenance is a variable cost. Again, I'll explain why in a second. I break repairs and maintenance down into like auto repairs and maintenance and equipment and tools repairs and maintenance. So if your pressure washer breaks down versus your car breaks down, you know, different bills, different places. So I'm going to say this is mostly repairs and maintenance auto. So now again, I need to like rename this for exactly what it is here if I want to merge it with my chart of accounts. So it's under variable, repairs and maintenance auto, merged in. All right. So the rest of that cleanup, I'm just going to leave alone. I'll circle back and do that, but you don't need to watch me inactivate all those accounts. Usually I would inactivate all those accounts. If I'm setting up like a brand new, fresh, never been touched QuickBooks before, I'm going to inactivate all the QuickBooks accounts that I can because they're garbage. And then I'm going to load my structure in there. If you are starting a brand new QuickBooks, that's what you should be doing. If you already have QuickBooks Online, you should load my chart of accounts in and then go line by line through your P&L, like usually, and there's no data in this account, so it'll be kind of silly, but I'll run my P&L for all dates. Like I'll filter it by all of time. Anything that has data in it, any line item that has data in it, I'll merge that into one of my fields. If there's a line item on my chart of accounts here that has nothing in it on my P&L, then I'll inactivate it because it's got nothing in it. If it has something though, I don't want to lose that history. So then I merge it. So let me talk a little bit about the structure. I'm gonna like introduce each of these, and then I'm gonna stop sharing so that you're not just staring at my QuickBooks screen and you get all of me. And I'll talk you through how to set up your QuickBooks. And I think it was Micah that had posted the question earlier on our Bookkeeping Beer and BS page. Like get some accounting education, and this will be the P&L education. How you want to measure stuff and why you want to measure it a certain way. I already talked about the P&L and balance sheet, like what the difference is between the two. So there's a little bit of education for you. I'm going to show you in the chart of accounts what these accounts look like, and I'll touch on them. And then again, I'll get out of share the screen mode here and get back to just me, and I'll do a little P&L education for you. So first thing to note, in your chart of accounts, it's always going to show your balance sheet accounts first. So before I get to the P&L breakdown, the first thing it shows is your assets. In this case, I've got a checking account, something I own. I have these stupid uncategorized assets that I can't get rid of, even though it's not a real thing. It's bullshit. Just got to stay there. When you add assets like Ford F-150, pressure washer this, lawnmower that, like add them individually and name them specifically so you can keep tabs on them. Undeposited funds, again, it's like just this limbo account that doesn't make sense for cash basis accounting, but you can't get rid of it. Now, liabilities would be your credit cards, right? It's a liability in that it's something that you owe. You don't own it, you owe money on it. You spend money and then you owe it. If you got a SBA loan or a vehicle loan, those are liabilities too. You'll add those here. And then the last thing is your equity, and that's your net worth. That's the difference. That's the business's net worth. So now we get to the P&L. In a service business, you just have sales. You don't need this type of service sale and that type of service sale and product sales and this sale and that sale. All of that sales detail about all the different services that you offer, keep it in your CRM. Don't bring it into QuickBooks. You can go get it from your CRM in like 2 seconds. So you don't need to have that level of detail in here. When you deposit money and it's from clients, just put it to sales. That's good enough. What we really want to scrutinize hard in QuickBooks is our expenses, where we're spending the money and how we're spending the money. So we break it down into cost of goods sold. And we kind of break down cost of goods sold into a few buckets, which is labor. And I'll skip down to supplies and materials because that one's kind of like the next obvious one. Then other costs, disposal fees, fuel and parking, merchant fees, damages and repairs. Cost of goods sold being anything that's happening out in the field. When you can like point to Mrs. Jones's job and say, we incurred these costs because we went and did Mrs. Jones's job. That's cost of goods sold. Next one that would be super obvious would be advertising and marketing. Anything that you're spending to get a lead in the door and make it look pretty. And we've got some sub accounts in there too. If you're giving to charity, I mean, it's branding, right? Like, yeah, we're good people. We give to charity, but it's got to go somewhere. Might as well go to marketing because you're sure as hell not trying to look like an idiot if you're giving to charity. You're trying to look good. That's marketing. Gifts to clients, probably don't have a ton of that, but that would go in there. The big three in marketing would be stuff you spend on ads and just branding and awareness, trying to get those leads in. People that you pay that are experts to do the marketing thing for you. So if you have an SEO person or a Google Ads person or a social media person, whatever you pay them is going into labor, contractor. And then kind of like your infrastructure costs. Do you have marketing software? And I'm not talking about like your CRM system to email your clients and stuff like that. I'm talking about like Responsibid to link it to your website so they can get a quote and buy really easily. That's marketing related software because it's meant to get a lead through your door and buying super efficiently and quickly without even having to talk to you. GoDaddy feeds, web hosting fees, paying somebody maybe to build your website. I guess that'd probably go under labor contractor, but just like infrastructure stuff that makes your marketing work better, I'd put under marketing software and website. Admin, well, my scroll just went all herky-jerky there. So the admin fee would mostly be labor, or not admin fee. The admin expense is mostly going to be labor for people in the office. So cost of goods sold is largely going to be expenses for people in the field. If you have an office manager, if you have an accountant, if you have a lawyer, if you have anybody that's spending time in the office or that does work in the office, they're going to be under admin. Or like office supplies and expenses, pens, paper, printers, computers, stuff like that. So big bucket, admin, payroll stuff. Legal stuff, legal and professional, which would be accounting, consulting, legal, and then office supplies and expenses, really. Here's some accounts that I need to, you can see they're not sub-accounted. That's how I know they're QuickBooks garbage, is that they're just disorganized random shit. So that's all sitting out here. We got to deactivate those. Now, there's two other overhead buckets. And oftentimes I see these just kind of like get lumped together and ignored, and then they get out of control and people are like, I'm bringing in a bunch of revenue, but I'm not making any money. And it's usually because of these buckets. Fixed overhead is stuff where you contract, or, you know, I said I wasn't going to share my screen when I do this, but I'm finding it easier to like show what I'm talking about. So I lied. Anyway, fixed overhead is stuff where you're negotiating, contracting, you're locking something in, and you're proactively making a decision about it. It's not a decision that like randomly comes up and you're like, oh, I didn't know I was going to have to do that. Like that was a surprise. It's stuff like your rent, your insurance, your cable bill, your software bill. Like you're not going to switch those things very easily. You're kind of locked in. They're sticky. They're hard to switch. And if you do twice as much revenue this month, or half as much revenue this month, those costs are generally going to stay the same. They're fixed. Infrastructure, we'll call it. Scroll past the other QuickBooks random accounts here. Variable overhead. So fixed overhead is generally locked in, stuff that you're thinking proactively about. Variable overhead is stuff that's not locked in. I'm gonna get this bad debts out of here because this isn't even like a real thing. I gotta take that out of my template. But then I gotta scroll back down. Oh, I hate that about QuickBooks. Oh, geez. First world bookkeeper problems. All right, so variable overhead is stuff that is reactive in nature. An opportunity comes up or an issue comes up, and you either got to spend money to do the thing or to fix the thing or whatever the case is. So education, events, and leadership. Like, you're going to go to the huge convention? Hell yeah, you are. And if you do, that's going to education, events, and leadership development. You don't have to go, but you might go, or you want to go, or, you know, whatever the case is. Employee engagement stuff. Are you going to throw a big holiday party for your team? Or are you going to throw a little holiday party for your team? Or are you going to like take them on vacation to the Dominican Republic? You don't have to do anything, but whatever you decide to do is probably going to cost you some money. And it's an opportunistic thing, right? Meals and entertainment, recruiting expenses. Obviously, like, you got to recruit more as your business is going or as you're turning people over. And yeah, you can like proactively set a recruiting budget, but when shit hits the fan and you lose a bunch of employees, you're going to spend more on recruiting, right? And so it's variable in that it goes up and down as needed. Repairs and maintenance for auto, tools, maybe some shop supplies. I don't like, nothing should really go into shop supplies because most of the stuff is on the truck, out in the field, doing the work, cranking that wrench, and therefore it's probably cost of goods sold. The only thing that would be like shop supplies would be like a toolkit in the shop for wrenching on trucks or something. Taxes, random taxes, license, penalties, permits, travel meals. Let me hit on taxes for a second because I don't want that to be misleading to anybody. Most taxes that you pay are not a business expense. So income taxes, those are your personal taxes. Yeah, they're because your business made money, but when the business makes money, it passes through that money to you as the business owner. You pay the income taxes on it as an individual, not as the business. So when you pay income taxes, yeah, you could pay it out of the business account, but it's not a business expense, right? That would be like double dipping. Like, that would be paying the tax against the income that they generated the tax with, which now would you owe less because you had another business expense? I don't know, but it's like double count, so you can't do that. So this isn't for income taxes. If you pay your income taxes out of the business, it's really just like you distributed money to yourself to help you pay your personal taxes. This isn't sales taxes. If you collect sales taxes from your customers, which we have to do in Minnesota and in Ohio locations, but not in our Missouri locations. If you collect a sales tax from your client and you pass it through to the government, it's not an expense. You collected it from the customer, you paid it out to the government. You're just like the conduit, just like when you pay payroll taxes for your employees. Like, that's not really your own, that's not your business expense. It's your employees' expense. They pay their half of the payroll taxes. You just take it out of their paycheck and pass it through the government, right? So anyway, taxes like those do not fall here. This would be like, we have a goofy one in our St. Louis location. They charge us property taxes on like our vacuums and our computers, and it's like $200 a year. It's really silly and piddly. But that is a business expense. It's tax deductible. Any other like little taxes like that is what that's meant for. Not meant for income taxes, not meant for sales taxes, not meant for payroll taxes. That's it. That's all that. I'm going to stop sharing there. So 5 buckets. You got to set it up in your QuickBooks correctly. You can go to yourblueskies.com. I'll get that chart of accounts out there for you. If you go out there and you don't see it, go back the next day or the day after that. I'll try to get it out there tomorrow. So if you download that chart of accounts, you're also going to go get my target budget template that's out there, which is in that same exact breakout. So if you go get the target budget template, those 5 buckets are there. Cost of goods sold, I'm going to run out of fingers. Oh, plus I have my like broken pinky from a football injury, so that's going to be funny. Cost of goods sold, number 1, anything that's happening out in the field. If you can tie it back to Mrs. Jones's job, or if your crew is using it out in the field, wrenching on stuff and getting the job done, it's cost of goods sold. Advertising and marketing, the cost to get leads in the door and make things look pretty for them. Admin is people in the office doing sales, doing customer service, doing your bookkeeping, whatever else, plus like office expenses and other piddly little stuff. Fixed expenses are proactive, locked in, sticky, hard to maneuver, proactively determined. And then variable expenses, broken pinky. It doesn't hurt, trust me. It's just scar tissue. Variable expenses are the reactive ones where opportunities come up and you either spend money on it or you don't. Problems come up, you either spend money on it or you fix it with ingenuity. So that's how to set up your QuickBooks the right way. Hit me with any questions you got, because I still got like half a drink left. That's the hard part. When I don't have a guest on, I don't have any time to drink. I literally brought a cooler full of ice next to me. I got another half can of ginger ale here to go with the whiskey that I had in case I needed to mix another drink, but I didn't have enough time to, like take a chill. Let me see. Did I miss any questions along the way here? Is this good for the landscape industry? Hell yeah, David. This is perfect for the landscape industry. One note on that. If you're in landscaping and you do lawn care, you kind of have two different businesses, and you probably already know that. I'm preaching to the choir, but you'll have like recurring work that's lower margin stuff when you're mowing lawns or applying fertilizer and things like that, versus when you're doing like hardscape projects. It's a whole nother business with higher margin structure, project-based work. So if you go get my target budget sheet, there's some specific videos that I loaded up just for that on YouTube. Because the way you think about sales and marketing is a little bit different, since you have two distinct product lines. I don't know if you're doing more of the hardscaping or you're doing more of like the recurring service stuff, but you kind of have an interesting business model in that green industry where sometimes you're doing two things that are same customers, but different services, and oftentimes different employees doing it. What I miss? I think I got it all. Hit me with any questions, dudes, gals. Let's see. Micah says, holy crap, there's no way I should try to do this myself. I agree. I agree with you. Unless you really like it, or, accounting is your jam. I would say for sure somebody should be doing it. Like, don't not do it. It's super important stuff. It's super valuable stuff. If you know the buckets, where stuff should go, how to measure it. In each industry, like how much you should spend on each of those things is a little bit different, really, on like cost of goods sold. What we spend on admin, fixed, variable, overhead stuff, pretty much the same across any service business. The cost of goods sold and the marketing can vary quite a bit if you're doing recurring services versus more like one-time services. Let's see. Zig with the big buck in his picture. I like every time I'm like scrolling through Facebook and I see Zig comment on anything, I like open up his profile picture because he's got a big buck on there, and just a redneck from Wisconsin. I like looking at big bucks. If you are starting out and your business account doesn't have much money in it, you deposit money from your personal account into your business account to pay for something. How do you record that? So it's basically the opposite of a distribution. It's an investment. It's an equity investment. So anytime money comes into the company that's not sales, I shouldn't say anytime, because you might get a check from like your insurance company as a rebate or something like that. But if you put money into the business banking account and it's coming out of your bank account or your mom's bank account or your friend's bank account, it's one of two things. It's either ownership in the company or it's debt in the company. If the company needs to pay it back on a schedule with interest, it's a loan, right? And as the owner of the business, you can still loan the business money and have it pay you back on a set schedule with interest. But if you give money to the company and there's no expectation that it's going to like pay you back with interest, and you don't have anything in writing, you basically just bought more shares of the company. Now, you didn't really like write up a share purchase agreement and like buy more shares, right? If you're the sole owner of it and you put more money in, you just added to the equity in the business, and it's an ownership investment, and then you're giving the business more equity to go do stuff. If you had a partnership or like, 3 business partners, which I have, there's 4 of us that own our holding company that owns Blue Skies. if I was going to go put money in, I'm either buying more shares and I'm maybe buying them from them, or I'm buying them from the holding company itself, and then they own less and I own more, or it's debt and the business needs to pay it back, and everybody keeps their ownership shares equal, like keeps their same percentage as before, the infusion. I actually had to do that a few years ago. I think I dropped like 20 grand in. We were just short on cash over the winter and needed to make payroll, so I threw 20 grand in, and that we just called a note, and we paid it back with interest to me. And when we paid it back, then I was like, hey, I think I should make this equity. And then I bought more shares of the business. So it's different when you have 3 business partners like that, but the methodology is the same. When you put money in, it's either equity or it's debt, and the company owes it to you back with interest. Good question, though. That kind of is like the inverse of what Ben had asked earlier, where if you pull money out, but it's not on the P, like, why is it not on the P&L? It's because it's an ownership distribution. Putting money in is an ownership investment. It's like the inverse of the distribution. It's just you taking money out or putting money back in. All right, I'm an hour in. I hit my goal for tonight, which was to break down how to set up QuickBooks. I got Josh's QuickBooks started for him. So I killed 2 birds with 1 stone tonight. Go get the target budget spreadsheet off of yourblueskies.com. Go get that chart of accounts off of yourblueskies.com. I'll load it up there, or just message me here, or hit me. You can message me directly, Dan Plata on Facebook. If you want me to do setup stuff for you and do your bookkeeping for you, it's what we do. We love it. That's all I got for you guys. I will see you next Wednesday. I got a cool marketing guest on next week that I find myself referring them all the time because they're probably like our best acquisition cost. And then I found out they did even more stuff than what we use them for. And I was like, I got to have you on Bookkeeping Beer and BS to talk about it. And, I'm going to put a financial spin on it. I'm all about the acquisition cost. And is it, making us a monetary return? Because that's what's easy for me to say. That is what marketing is all about. So we're going to have him on next week, I believe. And I'll get Bennett back on the show, Bennett Grove, who we couldn't have on tonight. He'll be on soon. He's got a lot of work to do on his business that he's diving hard into. But once he gets things sorted out, he'll be back on the show to talk about it. So that's it. I will see y'all next Wednesday. Have a good night. Thanks for tuning in.